Good afternoon, traders. This is Christian from Untitled Trade Group, and it is Friday, June 19th. So, congratulations, you made it through the week. This is your end of week video, excuse me, and we'll summarize all the price action for today, kind of my thoughts ahead for next week. As always, I'll tell you exactly what I did for the day, trades, some trade setups, some worked, some didn't for the day, but we'll go over all that. Theme of the day, I would say, a couple things. Obviously, quadruple witching. There were some interesting moves that basically happened at the end of the day. It looks like, and this is kind of the same story when you have for quadruple witching for index rebalancing. Remember, that's the one that I really look at. Option expiration, of course, is important and so forth, but it's the index rebalancing. And take a look at what happened to XLU today. Got smoked, down 2.8%. So again, this is the whole ETF, but this is happening in the individual names. So if you go through, I'm not going to go through all the names because it would just take too long. I'll go through a couple, but this is basically gives you in a nutshell what is the story with index rebalancing. Some groups have to get sold, and other groups have to get bought. Now take a look at what happened with XBI. It's almost the mirror. Well, maybe not the mirror image, but if you look at some individual names like Regeneron, uh, you know, probably a little bit of a combination of demand, but these names are probably being bought for index rebalancing. Big moves at the end of the day in some of these names, and yeah, I mean, I don't really have a fundamental reason why XLU is down 2.8% on a day where the market is pretty weak. Usually it's the other way around. But this is what happens with index rebalancing. And again, I don't have all the numbers from the S&P. You have to actually pay for that data from S&P to find out what's being bought and what's being sold. Rebalanced. But there you have it. There's that. So that's a couple examples. What kind of happened with the overall market? Well, I mean, we're definitely in this environment now of like, what the hell is going to happen in terms of these states that are experiencing, pretty decent upticks in not only cases, coronavirus cases, but also with hospitalizations. So that's the big unknown. How much of this is going to affect things? There's going to be some impact, I would think, right? We're one of the things which is kind of outside of the market, but I love sports and I can't wait to see baseball and basketball resume. And if some states are going to be having these further outbreaks, it's going to be really difficult, I would imagine, for sports to continue because they're flying all over the place. They're playing in different places. I don't know how that's going to work with this going on. So we'll just have to. I'll leave it there. I talked a lot about that in the member midday video. So I'm not going to rehash all of that. But our job as traders is to kind of reassess things, to manage risk. Right? We know that this put call ratio has been very complacent. I think it was a. Let's see if I have it in here. Let's see what this is. This is 0.74, so that's actually an uptick. So I'll look at the end of day numbers. So that's actually not indicating complacency for the day, which is good. But I'll tell you. Let me just tell you a quick story. I talked about this in the pre-market session. So if you already heard me talk about this, you can skip ahead a little bit in the video. But there's a narrative for everything. You could come up with a data point right now, and you could form a story around it. For example, Bank of America Fund Managers Survey comes out earlier in the week, right? It's a survey of fund managers, right? Institutions, these are the people who are putting money to work. They say that cash balances are extremely low. They think everybody is invested pretty decently in equities, right? And that's their survey. That's institutional funds. Institutional funds, as you would think, traditionally move the market. Then you look at money market cash balances. They're at an all-time high. So whichever data point you want to use, you could say with the institutions that they're very much invested in this market, and then you could take another data point and come up with a different narrative. So what does that mean for how you position, how to trade? And by the way, everything that we're going through is for information purposes only. I'm not giving out any advice or recommendations. There's the risk disclaimer. But what does that mean for you? Well, for me, I can't tell you what it means for you. But for me, I still, you know, I will look at all these things. I will look at sentiment. I will look at put call ratio. I like that Citigroup market sentiment model. But I look at a number of other factors. I look at credit spreads. I look to see if there's any risk in the fixed income market. Look, why don't we pull that up, by the way, as we're it'll be a good look. I look at the VIX, right? I look to see what the VIX is doing. A variety of factors to take a look at. Uh, Kind of ticked up a little bit at the end of the week, but still not heightened. So nothing really new out of that situation. But bottom line, the number one thing is to follow price and trend, in my opinion. Right there, that's the one indicator that is going to tell you what's going on. So, yeah, we didn't close. If you look at if you look at the index performance, this was another one of those days where that theme that we talk about, maybe not a theme, but the overnight moves are basically where you make the majority of the money, right? So if you buy the close and sell the open, you did pretty well today. If you did the opposite and you bought the open, you did horrible today. And again, I'm just talking about like holding. Obviously, people do all kinds of trades, but the S&P came into the day up 1%. Excuse me. So yeah. So we actually sold off about 2% through the session. So this is a little bit more than normal. But if you're playing by the rules and playing by the averages, buying the close and selling the open, you made money today if you did that very well on the long side. If you did the opposite, you got creamed just by doing that formula, right? If you got creamed if you bought the open and sold the close. So again, I bring this up because I know a lot of people like to day trade, and it's good to know what you're up against if that's your only strategy. You're up against the market makes money overnight and then sells off during the day. Not always, but in particular today it happened. Small caps really sold off hard, even though they started the day higher because they only finished down 0.5% for the day, but they were down 2.4% throughout the session. And I think a lot of it, again, if you look at some of the names that performed well, including that biotech sector, I think there's going to be, if, we just don't know what's going to happen with this COVID stuff. And I went over this in yesterday's video, how nobody knows right now how bad it's going to get, or if it turns around and everything is fine. But you could watch the price action in some of these groups. And, this was the trade that we went over pre-market today in the Tribeca Trade Group pre-market commentary, right? I come up with a watch list every morning. Or I don't if I don't think there's good, if there's good opportunities. But this was, if we go to the MarketWeb's channel where I put all the setups, I said I'm looking for a swing trade in biotech today. I'm looking at XBI consolidation to resolve itself. So what did XBI do today? Beautiful. And this was nice because I was able to take a couple targets in this today too. Because again, right now in this market, that's basically if I'm in options, I'm really trying not to get too far in the weeds with options. So if I do put one on, I do have a little bit of an itchy trigger finger taking targets. If I see gains right now, I want to take some. And again, not the whole position. I still have the position on for next week. But I could always, if we get market weakness in the beginning of the week, I could always put those targets back on. Or even if we get an inside day. So again, just leaving myself plenty of flexibility, being nimble. And I think right now in this environment, when we're seeing an uptick in some of the hospitalizations and cases in some states, I want to stick to being nimble, being disciplined, and trading what's in front of me as well, and making sure I'm locking some gains in as we go along. Interesting how many groups got hit, right? So again, we've the other thing for me, I really haven't wanted to be in the travel names, even when they bounced. That's just something that I have thought that the airlines are always tough trades. But if you look at what happened today, I could even bring up this Jets ETF, right? This thing down 2.6%. So they bounced, but they're weak, and it's going to be really tough. I mean, we're hearing that these cruise names, like they're not going to be able to, operate until at least September or October. So this is not a group. I know I understand that people want to buy things when they go down sometimes. Not me. I like to buy trends, right? Things that are really, really healthy in uptrends. And when they consolidate, something going back to XBI. What would you rather be in? I know this is counterintuitive for some people who are not trend traders, but I'll tell you the two books. First of all, a really easy read if you want an entertaining story is The Turtle Traders. Right? You could read about Richard Parker. You could actually follow Richard Parker on Twitter. Again, that's called the Turtle Traders, about Richard Dennis and about how he took traders and taught them how to trend trade and make money without knowing anything about the market. And then just the book Trend Trading by Michael Covell. Excellent books to read. They changed my perspective, for as long as I've been trading for. When I read those books, I've adopted that philosophy. But I will stick to names that have relative strength, that are consolidating in uptrends, and that continue to go higher. Not names that do this, that bounce and then the bounce gets sold and they're back to the lows or close to the lows. Again, and if you look at this, right, what's the whole thing? Since March, if you would have bought the lows in March in NCLH or the Jet ETF, how much did you make? $12 up to so okay, you made a little bit of money, right? Let's say you bought the absolute low. Yes, you bought some money, but wouldn't you have rather owned something like this that's gone up from $65 to 108 from the low, and you could have bought it over and over and over and made money? I don't know. Or the IGV ETF, any name in this. Look at the difference. It's striking, isn't it? And every time it dips, it gets bought. So anyway, that's what my plan is for now, is to kind of stick with these names. The Peloton, it's going to be really interesting. Even if, like, let's say that we don't have a further outbreak in COVID, there's going to be, everybody's a little bit different. I was recently talking sorry, I went over this earlier today, but I was recently talking to some colleagues. Some people are not returning to their office to December, right? They are more risk averse, right? They don't want risk. Myself, I'm in my office in downtown New York City, and I've been that way for the last 3 weeks. I am more of a risk taker. It just is what it is. I feel comfortable. Now I'm wearing a face mask and I'm taking precautions, making sure I'm washing my hands all the time, but I've got a face mask on wherever I go. But I'm following the rules, and I'm in my office, and I love it. I enjoy it. It's quiet in New York City. You also just don't get to appreciate that. But there's some people who are not going to return to work to Wednesday. They're not going to return to exercise classes. They're not going to go to a Soul Cycle. There may be some people that do go to a Soul Cycle or Planet Fitness, but there's going to be a lot of people who are doing the Peloton. So you kind of have to think about that. Everybody is different, and everybody has a different level of risk. Same thing with that. I talked about the market, money market, the money market balances being really high. That could stay that way because people don't want the risk. They don't want the headache. Maybe not the headache, but they don't want the stress of being in the market. That's not going to change. For people that are in that bucket of not going to return to work till December, and again, I've heard this from multiple people, not just one person. Those people don't want anything to do with the stock market. So yes, they have a big money market balance. That's not going to change overnight for them. They're not going to say, oh, I'm going to put this money all back to work right away. So that may be sticky. Just things to think about. This is the kind of things, and again, these are different narratives, but again, I think price and paying attention to, names that are in demand. And this Teladoc made a new 52-week high today, too. So, what I mentioned, I always go over all my trades. Some trade, I gave a couple things a try today. And the other thing is important. If you're, it doesn't matter what level trader you are. And by the way, there's so many bad things being talked about younger traders. It is great to see younger traders get excited about the stock market and try to make some money in the stock market. I encourage it fully. Months and months ago, there was no participation by the younger group into stocks. So as long as you're doing it wisely and not crazy speculation, this is good. It's how you learn. And it's better to start doing it the younger that you are, the better. Because you learn some mistakes. You'll make some mistakes because that's how you get experience. But I'll tell you, there's so much negativeness about, you know, uh, retail traders, the last couple weeks. It's like there's no reason to be negative about that. That's a good thing in my opinion. Just make sure that you're rolling with the punches. And again, I'm not giving you any advice, but you just don't want to be scarred because sometimes if you enter the market at the wrong time, it could scar you. That's what happened. And I know Kramer's talked about this before too, but new traders who entered the 2008 market, 2007, 2008 market, they got hurt bad and they've had a hard time returning ever to the market. So keep that in mind as you're trading. That the market does go through rough patches, and usually, just like we saw a few months ago, when it does dip big, it's a good. It's usually at the end of the day, it's a good buying opportunity. But you have to be mindful that the market just doesn't go up all the time. But here's a good example. AMD looked fine in the morning. A whole bunch of that momentum call buying, which again doesn't equate to anything. They're just trying to push a name higher. This is basically back to the 50-day moving average. I tried it. It didn't work. I'm out. And I will wait. Once if a name doesn't work for me, I don't get sour about the name. What I do is I place a new alert, and I wait for this thing to actually trigger properly in AMD. So I'll return to that name, but it is what it is. Right now, the main important thing and something that is to learn from by an experienced trader is that, hey, you got to get over your ego. Small losses are paper cuts. Paper cuts are fine. You don't want to sever your arm right now. So that's fine with me. And I actually legged into this pretty decently today. So I really thought it was AMD's day. I honestly, the way it was looking this morning and all that momentum call buying, and I'll show you if you don't believe me regarding all the AMD call buying and how the call buying is often wrong. I know people don't like to admit that on Twitter, but it is a lot of times, right? If you go to the beginning of the day, look at all the little nibbles of, I call them like the machine gun fire calls, just over and over and over. They're buying AMD. Yeah, they're wrong. They get it wrong a lot. I know because the reason why is nobody talks about it when it goes wrong. People have a big problem that they can't admit that that option flow is often wrong. I don't know. It's like a cult following or something, but it is what it is. So that's AMD, and then of course the XBI worked very well. I tried Facebook a couple times today. Just we've seen speaking of call buying, we've seen a lot of call buying in that one. I do like the chart. Again, for me, I will get into positions, but there has to be another reason besides call buying because I don't want to say I don't have the stats to say it's 50-50, but there's a lot of losers. If everything goes up, if there's big momentum to it, all the call buying works. If there's not momentum in the market, then it's 50-50. How about that? Is that fair enough? It's just the way it is. I made some money on puts on the Apple headline. Chewy was a nice little trade. That was something that I owned from earlier in the week. So again, perfect. Call buying in Chewy today. I'm already in it. I want to be in names before there's call buying. Does that make sense? Right? Because sometimes people, and again, this is something else people don't put on Twitter. A lot of times the call buying happens when the name is at the high of the day, up 3 or 4%. And what does it do for the rest of the day? Sometimes nothing. Sometimes it goes down from there. Again, people won't tell you that either. They think they'll try to fool you. They'll try to say, oh, did you see the call buying in this name? And it happened at the absolute high of the day. So I like to be in before the call buying. All right, what else did I do? So yeah, here's some of my thoughts. I'll go over this week's performance. ILMN is a nice setup, by the way. Sorry, I'm bouncing back and forth here, but I did put on a little trade at the end of the day of ILMN. I've got a defined stop here of about 364 for this one, but I've been in this one before and it's worked pretty well. So kind of playing for another breakout here. Weekly chart doesn't look bad. Again, it's got some resistance to fight through, but I think it's worth a shot. What else did I do today? And then I'll talk about for next week. I played a little bit of Apple. Katie Huberty was on CNBC touting the stock, so I thought that would be a good trade. And then that's basically it. So right now, as I said in the beginning of the video, I did keep some positions on, and I also put on a hedge. I've got an IWM hedge on. Where did I put that one? Added some put protection. Because why? Because I don't want to take off all my positions. I think I like some of my positions. So I did what I normally do going into a weekend, trim some positions so I'm not overexposed. I mentioned that I really want to be nimble and stay objective going into next week. But I want some exposure. And I have some put protection. So I'm hedging with something that I think is weak, and I'm long some things that I think have strength right now. And I think that's a good way to play it. This week's performance, by the way, here it is. S&P did finish up for the week, up 1.4%. I had a great week, by the way. I had a couple days, like today was not a huge winter day for me. And I think yesterday wasn't either. But sometimes you'll also realize in this game is that your big gains, you may find them come in chunks. And then some days you don't have it, right? There's no momentum in the market. There aren't good signals. But one of the things like younger traders always come to me and they're like, how much money could I make a day? Well, it doesn't work like that. It usually comes in bunches. You'll have one day where you hit a bunch of things, right? And you had a really profitable day. The mistake is trying not to come in the next day and think that you're going to have the same results, because it just doesn't work like that. So for the week, overall, wonderful week. My P&L was right at 52-week highs or 2020 highs, whatever. So I'm very pleased with that. Did I have a tremendous day today? No. Like I said, I got stopped out in Facebook, which I tried a couple times today, in AMD. But I had a couple nice winners as well. Performance looks like Q's really put in a good week. A lot of big growth, outperformance this week. That kind of returned. And the Chinese internets, my goodness, the Chinese internet's up 8.2%. Speaking of speculative call activity, super, super hot, right? I'll probably start with this one. Look at the weekly chart of this Billy. YY, I think, was another one that was was possibly like something M&A going on in this one. I actually forget at this point. But also look at this one. I know this one doesn't catch, it used to catch a lot of option activity, but you don't hear people talking about this one because they just haven't gone after calls. And people who just follow option activity, they can't look at other charts. So I'm being sarcastic. But look at this PDD run. I'm still in JD, which did not have a great day today. It was down 3.5%. What did BABA do? it seems like the bigger companies are not faring as well as some of the short-term, more speculative names. Baba was down 1.3% today. That's another name that opened on the highs and closed on the lows. Uh, the other name, which I bailed on yesterday, where did this name finish up? 3.8%. The name that saw the call, two other names that saw call activity today was 10 Cent Music, TME, and also Vips, another one that saw call activity today. And yesterday, Momo saw calls, which is trying to put in a double bottom. But I mean, look, do you see the pattern that's going on in these names? One name that I'm watching for next week that I started a position in. So this one I'm pre-positioning a little bit because by the time it gets to the call activity, it'll be up 3 to 5%. So that's the whole game plan, is to try to get in some of these names. Look at the consolidation in this thing. How nice does that look? So that's one I'm watching. And again, really hasn't seen too much call activity as of late. So I like to get in some of these things that are setting up. And again, you still have to be disciplined. If it doesn't work, I'll get out of it. But the other chart that I keep pulling up is this one. China internets versus U.S. internets. Look at the outperformance since mid-May and it's not like the U.S. internets have done bad, right? Here's FDN. You could have done really well in the U.S. internets, but you could have done even better the last month, basically the last month in the Chinese internet group. Very, very strong. Other areas of performance for the week. Biotech, we already talked about those. Software. Speaking of those internet, so again, if you've been in U.S. internets rather than Chinese internets, you still went up 4% for this week. But look at that performance for the KWeb ETF. Semis. So again, all in all, like pretty good performance. The names that didn't perform well, the utilities, which we went over, really got sold today, and the energy names. I mean, this has been the story all year long. So again, going back to what I said earlier, I want to be in names that are continuing to be on the left side, not the right side. All right, there's your international performances. Well, guys, that's it for the week. Very excited, as always, to finish the week as it is. Give yourself a pat on the back. Very headline-driven week. Quadruple witching, of course, the focus. So it's never easy, in my opinion, to kind of stick with the trend. And then I look forward to going through and getting you set up for next week. For the we always put out a watch list. I put out 2 videos. I go over all the macro factors. So if you're not a member of Tribeca Trade Group, you go right to my Twitter handle and check it out. My goal is to get people, profitable, and to get them ready for the trading week and have a trading plan. Right? I do the homework for you every day. So if you're busy, if you can't trade full time, that's my job is to give you setups that I think are interesting, and names that will hopefully outperform. But you go right here and click on this to be a member. All right, guys. Thank you for watching. Have a great weekend, everybody, and relax a little bit this weekend. Have a cocktail or two. Thanks, guys.